Well, stocks set to close the week higher following the U.S. jobs report, which showed the U.S. had added 255,000 jobs in July, but second quarter GDP came in at a disappointing 1.2% annual rate last month. So that wasn't good. Certainly some mixed messages for the Fed to figure out. Let's talk about it with Wells Fargo senior economist Mark Vitner and Hennessy Funds portfolio manager Brian Peery. Thank you both for being here. Mark, let me begin with you. Certainly a blowout number on the jobs report. What do you make of it? Do you buy it that the economy, or certainly the job market, is humming along nicely?
Well, it is humming along fairly nicely. We had a disappointing number back in May, and I think there's some problems seasonally adjusting the data. But when you look at it, we've added 190,000 jobs on average for the last 3 months. I think a lot of the strength in this report is some catch-up for some underreporting in prior months. The real question, though, is when you reconcile these stronger jobs numbers with those weaker GDP numbers, it implies that productivity growth is either flat or negative, which isn't good for corporate profits. It's not a very good, not a very sustainable economic environment, but certainly from the consumer standpoint, the strength that we're seeing in jobs over the last couple of months is going to be good news for retail. It's going to be good news for the economy in the third quarter.
Brian, in this world, when we talk about equities, this Fed-fueled equity world, it's very artificial. A lot of concern out there that, you know, look, these valuations are too much. The market should be set for a pullback. What's your thought?
I think there's still some opportunities in valuations. I mean, a number of the stocks that we like are still trading in single digits or low double digits. So I think that there's some sectors, as you mentioned, in the consumer discretionary area in particular, that have been kind of overlooked as people have sought out safety. So I think that there really are some good opportunities still out there.
Has the Fed, I'll continue with you, Brian, has the Fed kind of painted itself into a corner? At some point, somewhere, surely rates are going to have to go up. And what happens then to these equity markets?
Well, I think when you look at higher interest rates, it's coming. I think my kind of outlook is in the December time frame. I'm not really looking at September. I think what you wind up getting in there is a higher U.S. dollar. And if you have a higher U.S. dollar in a growing economy, you know, maybe I want to stay away from some of the multinationals that have a high currency exposure and look more domestically focused names and names, you know, that have not really participated in the rally. So away from some of the utilities and telecoms and into more consumer discretionary and some industrials and areas that I think can have nice pickups from here.
Mark, why are we up so strongly today, do you think? Normally when you get good news, it means that, well, the Fed will have more room to raise rates, and that normally knocks the markets down. But here we see good news is good for the market. What's going on?
Well, I think a lot of it has to do with doubts about how soon the Fed's going to raise interest rates. The problem for the Fed is that, yes, these jobs numbers look really strong, and it's going to put them in the direction of maybe talking about why they need to raise rates instead of why they can't raise them. But the fact of the matter is that with global central banks cutting rates and providing more quantitative ease, there's just so much the Fed can do. So, yes, they will probably raise interest rates in the second half of this year, most likely after the presidential election. And ultimately, they're not going to be able to raise interest rates all that much. All of that is pretty good news for the financial markets. It means that the consumer side of the economy is likely to gain some momentum. Housing is going to continue to gain some momentum. So the stock market should be able to hold on to much of its recent gains. August is always a tough month. Usually something comes out of left field that gets us in the month of August.
All right, we'll have to leave it right there, gentlemen. Thank you so much.